Good afternoon, traders and investors. I hope you guys had a very good day today. Continuing our daily consolidation here, let's take a look at the major indexes. And as I was saying yesterday, we were expecting daily consolidation this week as the lower time frames were overbought coming into last Friday. So let's see what we got here today on SPY. SPY still battling here with our weekly resistance line. As you can see, second day now of daily consolidation. Still got a decent bit amount of space here until the moving averages, maybe about 1% until we really start hitting that 1226 and the 200-day moving average at the same place, which puts us in a really good position, guys, considering our higher low is here, right? So anything in this range would be really good for daily continuation. The bulls really want to stay above this level to be able to come up and smash that resistance. If we end up going any lower than that, the most likely scenario then becomes like if we come all the way down here, then we're kind of going to need probably some more momentum, some more accumulation before we can think of really moving higher. At least that's how price action tends to have moved in the past. So that's it for SPY. SPY's really been held up. If you guys look, the three major components here are SPY, right? So we had the NASDAQ down about 1%. It was down about 1.5% at a certain point this day. XLF kind of open red, but kind of clawed it all the way back here with some news from Wall in the middle of the day. So the banks kind of were able to fight back here today and close near the high of the day. Gives us a good green candle. However, we are still negative on the day. Now, the sector that did all the heavy lifting today, guys, healthcare. Healthcare was an absolute beast. And we were expecting as much. This accumulation zone down here, as soon as we started crossing above these short-term moving averages, we knew the continuation was probably guaranteed. But it's always a question of where will that continuation take us? Well, the bulls really pushed it this week. They've been really making up for it, which is allowing our SPY to stay relatively closer to these higher levels. If you look at QQQ's come off the highs a lot more than SPY has. And that's what I've been saying. XLV's been doing the heavy lifting this week, but that's what we want to see, guys. We want to see rotation. It's okay if we have a few sectors dropping, as long as one of our major components is doing the heavy lifting, it ensures that SPY can still have some healthy rotation and we're not just dropping. What you really don't want to see is all of your key leading sectors smashing the lows of the day all day long. Then the move is real. Then the bears have full control. But as of now, nothing to worry about, in my opinion. Healthy consolidation. So as we can see, the NASDAQ had a pretty rough day, especially for some names out there. A lot of the lower tech names down 3, 4, 5, 6%. So hopefully you guys were able to scalp some short puts towards the lower end of the day. We'll be going over a few of those plays later. A few of the plays that I was mentioning yesterday, we'll check in on them. NASDAQ, see, daily, touching now our 12 EMA. We're still about, roughly off this move, probably about 40%, 50% into it now. So still a healthy retracement. Lower time frames have really been cooling down here. Obviously the 4 hour now, we're coming back. 4 hour still largely in an uptrend, a lot of space. It's funny because the 4 hour and the daily, they kind of have the same higher low that you're looking for. Hourly, obviously in a downtrend, guys. Off a big move like this, such a large move, you very, very rarely are going to be able to V-shape like this, right? So when you get such a large move, the expectation is to put in a higher low, somewhere around the 50, 60% fib, if you guys use fibs. And then we get to retest the lows. Now, whether they break the lows or go lower, that's anybody's guess. I'm just saying the most likely scenario, if you're looking early morning and you get caught with two big candles like this, and you're looking at, well, what could be the possibility for the continuation on the day? Yes, it could turn lower. But if you start seeing it like the 15-minute reverse, right? Don't assume that we're going to go recapture our daily highs, our daily opens right away. The most likely scenario for such a heavy drop and this fast, unless we get some very bullish news on the day, unless there's some major catalyst, if there's nothing much to look out for the day, if you're just looking at price action, you're going to be expecting the higher low and continuing our daily consolidation move. This would be the most likely scenario. I know you guys don't want to see it, but on the daily chart, if you get nervous, guys, just zoom out. Just zoom out a couple time frames. You'll see that we're very, very healthy on the daily, still very healthy on the weekly in terms of a slight pullback. Look, guys, like you come off a bottom like this, And we lined up. This was during the, financial crisis of most recently. And look how much we pulled back. We must have pulled back maybe 50% of this upswing here, and there were some big red weekly candles in there, but the bulls kept it strong enough, played off this previous resistance level that now became support. And that's what we got to do, guys. We got to really take the stairs up. So even if we start coming down here a bit more, as long as we see rotation, as long as the financials and healthcare could potentially keep doing their thing and not just drop to lower lows, QQQ has the room, has the time to pull back. It can take a breather. It's done most of the heavy lifting over the last 2 months. So, whenever they take a break, just look out for the rotation. If the rotation is there, we're all good. Now, Dow Jones, defensive names. Very, very, very strong, guys. Very strong. I mean, you look at a couple names in here, right? Like McDonald's or Johnson & Johnson, which is more healthcare, but still in the Dow Jones, right? You look at names like Caterpillar or John Deere. They were down for the day, but still the Dow Jones able to put in some higher highs here. Names like Coca-Cola, Pepsi, most of the defensive names, bigger names in the Dow Jones and whatnot. It's very, very healthy. As you can see, guys, like what's been taking over now that our other sectors have been dropping, the Dow Jones and the defensive names. I mean, you can argue that on a daily time frame, this is a cup and handle, right? So you can see some follow through to the upside on a lot of defensive names if you guys want to play them, right? Some of them have already run significantly. One of the ones I like to look at, Costco, right? Costco here, we have a beautiful tightening range. This is now a 1-year tightening range in the making, right? On the daily time frame. Weekly time frame, you see it a bit better. Look at this chart, guys. Costco is just an absolute monster, revenue monster. And every single year they grow their customer base, they retain their customer base, they have very, very good products. And if anything, with the recession looming, right? People will tend to shift to their Kirkland brand products. If you guys don't really know how Costco operates, right? They have their in-house brand, which is their Kirkland brand. And they also have other products with other brand names in the store, but they're kind of like in-house brand, which will be cheaper than all the other brands. Let's say it's, I don't know, like let's say you're doing toilet paper, right? They'll have premium brand toilet paper for $25 for 40 rolls, and then their Kirkland brand will be like $20, right? So what happens in a recession is you get rotation to the other products. And where's Costco's largest profit margins is on their Kirkland brand. So if people start switching, and that's what a lot of analysts have been talking, if people start switching from the premium brands that Costco offers, which are still significantly discounted than traditional grocery stores, and go to their in-house grocery brand, well, that also helps them juice up their margins a little bit. So Costco is one that I've been looking at, accumulating some shares in the lower part of this range here, guys. And, it's going to take a lot to stop this company from future growth. So just keep that in mind. That's one of the names that I like personally, if we're going, defensive stocks that do well because they generate high margins every single year, right? Good stocks with good return on invested capital. Now, moving on to the Russell, which we talked about yesterday, right? Russell is still stuck in our lower end of this range. This is what we were looking at, guys. Remember, I was telling you, if you want to play the short puts, look for down here. Yesterday, I was saying we might get more continuation of the downside today. It's exactly what we're looking for, coming down to the lower end of this range, right? So this is small caps, but also has a big weighting of XLF, financials in it. So as long as financials hold their ground, yes, a lot of mid-cap and small-cap stocks that are more technology-oriented in here are going to get beaten up. But as long as you don't have the sheer dump in financials, you won't end up with something like this, right? That's all financials. All right. So as long as financials can hold relatively stable and we don't get many more negative headlines, bank failures, credit crunches, and stuff like that in the immediate future, the bottom of this range should be a very, very good area to play off of as support. Obviously, nothing's ever a true thing. Can it just smash through the support and we can go to lower lows and everything? Sure. But as long as our rest of our indexes keep grinding higher and don't lose the weekly and daily time frames, I'm not very nervous in terms of the Russell. So we're going to move back to this play. Keep this play in mind. It was our play from yesterday. I'm going to show you guys the options chain on it and see how this evolved today. Now, moving on to Bitcoin. So yesterday we were talking about the fact that Ethereum was the first one to break this range, break this higher range, right? So Ethereum was the first one to follow through on the break. 2 days, 2 very big daily candles in a row. Bitcoin, still subdued, still subdued. Bitcoin doesn't want it. I don't know. It's, now Bitcoin's lagging. So now if we're trying to follow Ethereum, we want to see Bitcoin start to really push up into that range. It tried to last night. Once again, got beaten down. Wouldn't be too worried, guys. We're still riding the heck out of this 12 EMA right here, right? Weekly time frame, still extremely bullish. As you can see, we're really consolidating. Just to give you guys perspective, right? When in doubt, zoom out. Give you guys perspective. We're consolidating at the very top of this weekly move. So still, nothing to be worried about, nothing to be nervous about, in my opinion. Our levels are still set, still looking for that continuation on the weekly. Our next continuation level, like I was saying, is going to be this 31,000 level, about 31.5 to 32.5 level for the next resistance area on Bitcoin. Ethereum, next resistance level is pretty much going to be around this top here, this little consolidation area here, which is roughly around 2,000. I mean, we're almost there. If Ethereum keeps grinding higher, it's a very good possibility that Bitcoin ends up following. Because if you guys know one thing, Bitcoin loves to be in the spotlight. And when it's not, it kind of gets jealous, right? We have a lot of traders that base a lot of their trades on all of these altcoins based off of what Bitcoin's doing. So as you can see, there's a lot of altcoins that are trying to push up, similar to Ethereum in terms of percentage gains on the day, but Bitcoin kind of subdued. So we really want to watch Big Daddy Bitcoin. If Big Daddy Bitcoin starts breaking, then we can start looking at a lot of these lower coins here that are struggling to break, very, very long ranges, very, very extended ranges on the downside, right? So that's it for Bitcoin and Ethereum. Not much movement. Ethereum's breaking. We're watching for the follow through on Bitcoin from it. Now, going into some individual stocks. So obviously, we want to look at the ones that moved the QQQ the most today. So as you can see, Apple started off with a very, very rough day, guys. We were looking for, as of yesterday's video, looking for further consolidation into the 12 EMA. Almost tagged the 12 EMA, right? So we're about, from this higher low right here, at this point, we're probably about 38%, as a matter of fact, from it. Almost down to 50, right? So as you guys know, anything above 50% or above 61%, if the bulls can hold that level, it's a very good probability for continuation of the upside, right? So Apple started off with a very rough day. It was able to gain some of that back in the later end of the day here. However, we have lost our hourly uptrend, right? Have lost the hourly uptrend. A likely scenario would be for us to continue our movement to the downside. Will we break this and set the hourly downtrend to the lower side? That's what we're going to be watching out for, guys. If you're looking to base off the levels, just base it off of these levels right here, right? There's a couple gaps to be filled here. You want the bulls to kind of hold that 160 level, hold this, previous area of resistance that now should be acting as some slight support here, right below our gap. So if we can hold this on Apple, it'll still be looking good on the daily time frame. Weekly time frame, still very, very strong, guys. We're a long way from breaking this weekly, last week's low, right? Around 155. So just keep that in mind. Apple, much needed daily consolidation, like we were seeing yesterday. Leading into Friday, a lot of lower time frames here. 4 hours, you see on this RSI. 4 hours was overbought. 1 hour was overbought. So this is just normal market movement, guys. Normal market movement. What you don't want to see is the daily time frame start cutting too low like this. Then we set a lower high and then start coming over here. That is when I'll start, maybe thinking that, are we trying to do potentially some weekly consolidation, right? To try to come test these lows here. One thing at a time, right? So that's how, if you always top down, guys, always top down. If you lose the hourly, you're looking, okay, what's the 4 hour doing? If you lose the 4 hour time frame, you got to look at the daily. Okay, if we lose the daily, then you go to weekly consolidation, right? But look at our monthly close on some of these, right? Look at our monthly closes from March. Here's Microsoft. So in my opinion, I'm not too worried. Can we start giving a little back to cool off the lower time frames? Sure. But in the longer time frames, in the grand scheme of things, guys, I'm not worried. I'm not worried for big tech. I know a lot of people are. A lot of people say they've run too far. But in my opinion, I am not too worried about it. I'm really not too worried about it. The reason that these companies are performing so well is because they can weather a lot of what's being thrown at them. They have very high free cash flow, very good margins per year, very high return on invested capital. They perform well and they have pricing power to get through the recession. So don't forget that. That's why a lot of big funds and institutions flock to these same names all the time, Apple, Microsoft. It's because they just get the job done in any market. So now looking at Microsoft, same situation as Apple, cooling off here. Microsoft is actually holding up very well. We're still a ways off here. This 12 EMA on the daily time frame. Hourly time frame, hourly consolidation is underway. You can say we lost the hourly higher lows, yes. But, I'm really more focused on the daily here, guys. You want to see, for us to regain the hourly, we're going to have to do something like this, then pop above, then set the higher low, and then resume, right? So when we zoom out and see how that would be on the daily, that may just get us down here, right? We may just grind this 12 EMA. Weekly time frame still excessively bullish. Well, we got to lose, if you want to see the weekly consolidate, we got to lose the daily time frame first, right? The daily time frame, we got to get down to here. Where's that line up on the weekly? Really right here, right? Which would not even be from this move here. That would only be about between the 38.2 and the 50% mark. Still extremely healthy, right? There's so much space to work with, guys, and that's what I kind of want to convey in today's video. Is there is still so much. There's still so much space. Don't just think that the market's just going to dump. Recession fears and whatnot. We did a lot of pricing in of all those fears here, right? So as you guys may know, usually the markets will bottom 6 to 9 months before the economy bottoms, right? And everybody's calling for end of Q2, beginning Q3 for the actual economy recession to really be, fully underway. And if we just take the December lows, on a stock like Microsoft, right? Microsoft didn't bottom in October when a lot of things did. Actually, yes, they did. Sorry about that. October and December, right? October, late December, we found our bottoms on most of these stocks. They're calling for, end Q2, beginning Q3. That's our 6 to 9 months that we're looking out for. And history tends to repeat itself. So the market is forward looking. Never forget that. We have priced in a lot of the damage, a lot of the interest rates, and a lot of the negative catalysts that were occurring last year. Russia, China, inflation, interest rates, potential recession, potential 2 negative quarters of GDP leading into December, January. Priced in a lot of it, guys, and we've now created a lot of space. So just keep that in mind. Moving on to Google. The reason I always do Apple, Microsoft, and Google is because they're the 3 largest weights in the QQQs, right? When you see QQQs having a really negative day, you got to look to the largest movers and where it's coming from. And if these guys are still holding up relatively well, however, they need a bit of consolidation, then you know that you're good, right? As long as we're not setting daily downtrends and weekly downtrends on these 3 major names, then our NASDAQ should be holding up, Now, what you want to do here on Google, like I was saying yesterday, right? Google opened up strong, finish a bit weaker. We did a good job cooling off the timeframes from last week, right? 4 hour was a bit extended. 1 hour last week was also a bit extended, right? Leading into Friday. So now we've allowed everything to kind of cool itself off. That's exactly what we want to see. Green rectangle, once again, my buy zone for Google. It's a nice little range here from about, the lower end of the range, 87 to about $100, guys. If you can be writing options here within this zone, you wouldn't be mad to be assigned, especially with a company like Google, the numbers that they're generating. And I think they're only trading slightly above SPY. SPY's trading at about 17 PE, 18 PE right now. Google trading at about 23 PE. But I mean, guys, like the revenues, right? Revenues, margins, absolutely outstanding. A company that delivers on return on invested capital, at least 16, 17% a year. So Google's great pick, especially considering that they are still 30% off their highs, right? If you look at Microsoft now only about 17% off their highs. Apple now about Jeez, Apple's run a lot. Only about 10% off their highs, right? All-time highs. Google is kind of trailing, right? So you still have some good opportunity on Google. I don't bring up Amazon, guys, because Amazon is kind of struggling. I used to love Amazon, but Amazon has been really struggling with cost control this year. As you can see, their margins are now negative. They don't have the same 15, 20, 25% margins when you look at Google, Microsoft, and Apple, right? So Amazon, you kind of got to be very careful. It's a slight growth trap, right? At this point, still down 45% from all-time highs, right? That you can see exactly where I sold my Amazon shares off this initial rally here. This was a rally that I was interested in off last year. So I still had that sold notification up there, right? Sold 133.61, and I haven't bought the stock back. I've been writing some options on them. Fortunately, haven't been assigned on any of the positions over the past 6 months that I've been doing so. Been really conservative with my strengths on Amazon. But Amazon, until I see their AWS model really start to pick up some volume, really start making up for the retail business, and until Amazon can get some better cost control, I know a lot of people are going to say, well, listen, Will, they built, they 2x their factories last year. Yes, it's true. It's true. But you're coming into a recession with not a lot of free cash flow and not a lot of high margins, right? So unfortunately for them, the borrowing cost to build all these new factories, right, was done. Yes, they were financed in 2020, 2021 at the lower rates. However, if they ever have to refinance any of their existing locations or stuff like that, I'm just thinking that, it's not the optimal time. They're kind of stretched. Essentially, what I'm trying to say is they're stretched a bit thin now, in my opinion. And that's probably why the share price hasn't been allowed to recover with the rest of big tech. Moving on to NVIDIA. Everybody's favorite semiconductor, right? NVIDIA, right? Now, NVIDIA gap down open today. I was wondering if we were actually going to close below the 12 EMA, because as you can see in this entire move, right, since January, we've only closed below it a handful of times, right? 4 or 5 times. Whenever that's happened, right, we've always rebounded significantly hard, right? So is this time going to be any different? We're going to see. We did not close below it now. We gapped down, started going into this territory here. But as you can see, guys, the NVIDIA bulls, they just do not want to let this thing drop, right? Hourly time frame recovered a bit here in the middle of the day, towards the end of the day. MACD on the hourly wants to cross over. We'll see what happens tomorrow. Could there be potential for filling this gap and then, further consolidation in this area? Yes. But for everybody that's thinking of shorting NVIDIA at the top, guys, I see what you want to do. This is why I have this area right here. If it gets up here, right, on some gap up, I will be shorting with you, right? Not a lot of size, but I will try my hand on it because the weekly time frame here, we're getting really extended on the RSI. Daily time frame was extended as well, so now we've pulled back. Could this potentially be a move for this and then further weakness in NVIDIA and the rest of the semiconductors? Very possible, guys. SMH, though, this chart looks a lot healthier than the NVIDIA chart, right? Not all semiconductors look like NVIDIA. So could there be an argument that NVIDIA could pull back more than the rest of the semiconductors just because of how extended it is? Sure. Look how far we are off the 12 EMA, right? Look how far we are off the weekly higher lows, right? We're so far off these weekly higher lows in this position right here, 226. We could drop another 15, 16%. And still be in a weekly uptrend. So there's a lot of space to consolidate, guys. Don't get too greedy on it. Like I said, what you really want to see if you want to be looking at some shorts, guys, you really want to see us start rolling over the daily time frame, right? So we got to take out this guy here. He's our most recent higher low, right? So you want to see us take him out, then struggle up here, and then start to push like this. If I see this, I would get into a short here. You can then put your stops above the highs here and look to play that downside continuation into this guy or potentially even into this guy, right? But don't jump the gun, right? This trend, this is still a daily uptrend. It's still a weekly uptrend, a daily uptrend as well. So don't try to short too early. I know you want to do it. I know it looks juicy, but wait for that confirmation, guys, okay? Now, time to get into some of our plays. So let's look at the plays that we were looking at yesterday, yeah? So first, ON. ON, as I was saying yesterday, right? ON, as we were seeing yesterday, started coming back down into this area, this target range here, 74-ish to about 72 is the range that I was targeting, right, for ON to be writing some puts. After such a red day yesterday and the pullback of the indexes, I was almost sure that we were going to get continuation to the downside, today. So what happened today? ON actually came down into our premium zone, guys. You remember yesterday I was telling you, look for the 0.5% to 1% trades in this range? Well, look what happened, right? 72 to 74 for next Friday now. Now, 72 is actually paying more than 0.5%. You can actually get down to the 71s now, right? 0.5% here would be 35 cents. You can get 40 cents right here for 71s. If it's too juicy for you, you can even go down to the 70s. Look at the 70s where that would put you. The 70s would put you right the 200-day moving average, right? Pretty good level to be writing stuff off of, especially if you're counting on that support and further continuation if you like semiconductors, right? And you don't want to pick something like Nvidia that's has too much that's run too much in your opinion. So ON semiconductors, right? So 71. And now, where's our 1% play? Our 1% is now the 73s. So even if you want the 1% juicy trade here, 1% a week, be 73s, right? 73s, you're getting about 73 cents for it. So your break even would actually be 72.23-ish, right? 72.20, the bottom end of this range. You can wait for tomorrow, one more trading day left in the week. We could potentially be getting some further continuation to the downside in the indexes, just to line up with this top of this range here. I wouldn't be expecting a terribly red day tomorrow. I mean, there's no significant news. All we're really expecting is further daily downside continuation, right? Just consolidation, really just consolidation, nothing more than that. At least that's what I'm expecting. So if you want to wait till tomorrow, maybe go a strike down, but these are all going to be valid for next week. Keep in mind, today's a short week, so you do get Friday's premium for free. And then you get all the theta decay over the weekend. So that's it for ON. This is the target range here, 0.5% to 1%, lining up with our support zone on the charts. Second play, Tesla. As we were saying, guys, we were expecting Tesla to continue to the downside today with the indexes for our daily consolidation. It must sound like a broken record at this point. And we were looking, once again, at this tightening range, potential tightening range at the top end of this larger move, right? So keep in mind, we're still in the top 30-40% of this massive move off the bottom here, right? Anything over, you could say that we did lose the daily higher low right here today. We did lose the daily higher low. This is true. However, on the weekly, we're still looking now on Tesla for the weekly tightening range. Did it make a weekly lower high? Yes. But we're now kind of stuck in this little zone here, right? We're closed below the moving averages now. So now we want to be targeting the lower end of this range. Like I was saying, guys, yesterday, the 170 to 180 area, right? The lower end of this range, looking for 0.5% to 1%. So where would that be? Yesterday, we were talking about it being in the 170 area. So let's see how much you get now. No, this is too much. Let me refresh that. Sorry about that, guys. All right, so what we want to do here on the on Tesla for next Friday, like we're looking at, so bottom end of this range here, like we were saying, 165 to about 180, 170 to 180-ish, right? 180 now, kind of a bit close, so let's go down a tiny bit, 160, 160-ish to our 175-ish, right? Bottom of this range here. Now, as you can see, right, where's our 0.5%? Well, 0.5%, half of 170 would be about 85 cents. So as we go down here, this is under 0.5%. Tomorrow, if it does dip a little more, or today at the low of the day, you may have been able to get 85 cents here on this 165 strike. Actually, it would be more like 82 cents, something like that. 80 cents would be your 0.5% here. 1%, all the way up here now, 172.5s. Right? So that's about a 5% downturn. This would put us full another $20 from current strike. So that would be over 10% move, right? 10% would be $18. So 10% move on Tesla for next Friday to the downside would be your 0.5% play. Looking more up here towards the 170, 172.5s, you would be more towards the 0.81% for the week. However, you're kind of only working at that point with about 5, 6, 7% to the downside, right? So depending on your risk tolerance and what you want to do and how actively you monitor it for trading, that would be your range for Tesla. That's the range that I'm personally looking at for puts for next week, guys. Now, last play of the day, IWM. Like I was saying in our recap here. So IWM, right? As we were saying, this is the Russell. We want the lower end of this range here, right? We want the 168s, anything below 169, 168, all the way down to 164. That's what we're looking for our 0.5% to 1% trades for next week. So as you can see, guys, look, we're here. I'm not sure why it keeps doing that. All right. So what we want for next Friday, the 14th, look at our premiums now, guys. Now that we've come down today, like I was saying yesterday, sometimes it's good to wait towards the end of the week, right? I always write my puts on Monday. Or if we get a short week like this and I want to capture Friday's premium, I can look on a Thursday. Sometimes I'll look on a Friday if Friday's a red day. Most of the time, I just want to be out, no positions over the weekend. But if Friday's a red day, depending on the levels, and you guys see how I analyze them now, I will do some on Friday. I won't load up the full exposure, but I will pick and choose some. So this coming into for Thursday, tomorrow, for next Friday, look where we are now, guys. 167, right? So the 170s, half of that would be about 85 cents, right? So where's your 85 cents? Right down here, the 168s. That's about 0.5%. That's the bottom end of our range, right? So our bottom end of our range here, right? The 168s to about 164s. So the 168s now are paying us 0.5%. 168s now paying us about 0.5%. All right. If you want to get a bit more aggressive with it, the 1% play now, it would be a midpoint between 171 and 170. They don't have it pretty much. 171. 171 for next week is kind of a bit too high and for my personal liking on this one. But because it's an index, like I was saying yesterday, the premiums tend to be less juicy. If I wanted to be juicy on this one, I'd take the 169s for a full $100 here, slightly over $100. If we dip more tomorrow, then I would be looking for $1, one strike lower, right? Then you might be able to find your 0.5% play on the 167s, depending how far it drops. But that's how I follow the market down. As long as we're writing something here to the bottom end of this range, I'm personally happy with it, because that's where I would want to pick up the Russell. I think it's a good support level. As long as XLF doesn't absolutely rug pull us, I think that this support level should be there should be some very good bid support in the support level, enough for me to be writing covered calls for 1 to 2 weeks, as this is a weekly time frame, guys. You see, when it gets down here, it can stay down here for several weeks. So as long as, if I get a sign, as long as I have some premium to write some covered calls to the upside for 1-2 weeks, just get me out of the position, it's good enough for me, right? It's good enough for me. That's all we want, guys, to be making 0.5% to 1% a week on your total exposure with these plays. So I hope you guys enjoyed today's video. Let me know if everything was informational, and if it helped you guys, I mean, consider giving me a like, consider subscribing to the channel. Let me know in the comments what you guys want to see. More plays, less plays. Let's do it. All right. Have a great day, guys. I love you all.